Hey guys, we're here at Consensus. I'm Lee Bratch, the president of Texas Blockchain Council. I had the privilege of sitting down with Ethan Vera, co-founder and chief operations officer at Luxor, our good friends over at Luxor. Seems like that every other day we're mentioning you guys in some way, shape, or form. We talked about you a lot at the TCU Mining Summit because of what y'all did to help us with the Fort Worth, making Fort Worth the first city in the U.S., coming on to be the mining pool for the city of Fort Worth. But we're going to talk about geopolitics today. So, Ethan, tell us a little bit about your recent trip. What you saw in China, what you think about what's happening in Russia. Give us a little bit of intel there.
Yeah, so last week I got the chance to go back to China, first time since before the pandemic. Back in 2019 when I went to China, really the capital of Chinese mining was in Chengdu, which is the hydro province where in Sichuan region, you get pretty cheap electricity prices. Fast forward,
because of the rain, right? The hydro.
Yeah, exactly. Okay. And so from September until May, hydro is very abundant there and very cheap, sub 2-cent power. And then fast forward, just over 2 years to May 2021, China banned mining, and so most of those miners ended up looking overseas. Some of them looked into their backyard, which was Russia, Kazakhstan, Iran. Many ended up coming to North America. Since that time, the capital of mining in China has moved from Chengdu to Shenzhen. Shenzhen is the up-and-coming city in China. They refer to it as like the Silicon Valley of China, but really it's the center of all manufacturing. And so people like MicroBT have big offices there. All the Chinese brokers are there. All of those activities are still legal in China, so building machines, shipping them internationally. And so we got a chance to meet with some manufacturers and brokers there.
So how do you feel like, so let's start with the health of those two companies, Bitmain and MicroBT. What's your impression on what the latest, the hardware market has just been through the floor recently, so has that affected them? I know they were sitting on piles of cash. Is that exhausted? What are your thoughts on that?
So I think they're going through trying times. On one hand, they're facing decreasing mining economics and lower capital coming into the space, so less demand for their machines. On the other hand, they place big bets on hydro-cooled machines, which on face value look like very good machines, well-priced, good efficiency, but so far in practicality it's been very hard for mining companies to roll out at scale, and we've seen a lot of operational complexities with it. And so right now I think Bitmain and MicroBT are still figuring out what they're going to do with all this hydro supply and figuring out how they can get those products to market.
Are they self-mining with it right now, probably?
Probably. And so Bitmain, I think, has quite a lot of machines that they need to move to market. MicroBT is actually quite interesting. We met with them, and we met with a lot of their partner broker clients. The common theme we heard was that a lot of MicroBT units are now flowing to Russia, and Russia is becoming a larger market than the United States.
Really? A larger market than the United States? Okay, that's fascinating. So do you think that's a result of the Russia-Ukraine war and sanctions? Is Russia are there as many, we hear rumors about state-sponsored Bitcoin mining in Russia. Is that, you think, accurate?
Potentially. So I think there's probably a few factors here. One, we're looking at a sole manufacturer, so not necessarily indicative of the whole market. Like, I'm not sure about the Bitmain units, but zeroing on a MicroBT, I think one is a lack of capital in North America. Two is uncertain regulations, I think is hurting the investment capital coming into this space in North America right now. And then on the other hand, Russia, I think, has a lot of reasons why they'd want to monetize some of their stranded energy sources and potentially use Bitcoin as a store of value and further the de-dollarization. So right now, it seems like for the past 3 to 4 months, that trend has been picking up momentum of Chinese miners deploying more machines than American miners. And that can kind of speak to some of the large growth in network hash rate that we've witnessed in the past 2 months. A growth that a lot of people are kind of scratching their heads at, like, where is this coming from?
Yeah, it's fascinating that we would see that growth in this period of time where the hash price is still so low and the miner economics don't, they look a lot better now than they did a month ago, right? But the difficulty levels increased quite a bit. Of course, Bitcoin's on a little bit of a tear, which is great, helps a little bit out with that average, I guess, that multivariate hash price. So in Russia specifically, let's stay on the geopolitics of this for a second. So play this out. say right now in Russia, there's say 1,500 megawatts of Bitcoin mining. Maybe they double that in a couple years. They are generating what is potentially state-sponsored, and because it's Russia, right? The state has their hands in everything, whether or not it's an oligarch who then pays tribute, or it's actually like Rosneft or one of the state-owned oil giants in Russia that's using their like ultra low price gas that, by the way, they can't sell to Europe because of all the sanctions, and they sell some of it, but they can't sell all of it. That just gives them like they're not like mining on flare gas. They're just mining on the gas that they can't sell to because there's a pretty big delta on what Russian gas goes for versus what like Middle Eastern gas or U.S. gas goes for in the European markets because of that those sanctions. So what do you think happens? Play it out. 2 years from now, they have 3,000 megawatts of hash rate. Say half of that is direct state-sponsored mining. What does that do in the halls of D.C.? Like, what does that do for our like national security like thinking? It can do, in my opinion, it could go one of two ways, right? It can go, the U.S. says, hey, this is really important, we need to get involved. Or they can say, hey, this is what we feared, this is contributing to de-dollarization, we need to attack it.
Yeah, well, I mean, it could play out in those two ways and maybe a myriad of other ways. I think
that's true. It's not a binary, but
yeah,
it's a spectrum.
I think for the network, it's good to have international diversification across the network. No country should have much more than 50% of hash rate. 15 or 50? 50.
Okay.
50.
Got it.
And if one country did, I'd want it to be America because we have better rule of law. Things don't move as quickly here. But certainly when you like rewind to, early 2021 when China had 50 to 60% of the network, I personally thought that was a pretty big risk to the Bitcoin network. Maybe a bit less than some people played it up to be, but I think it was a risk. And so as Russia aggregates hash rate, I think we need to combat that in America, and we need to encourage and incentivize miners to come here. State mining is not going to go away, whether it's Russia through state-owned enterprises or other governments like Bhutan is now mining with a few exahash. Venezuela is probably going to confiscate up to a few exahash and start mining. Now more than ever, we need to really encourage mining in North America, in the US and Canada. Do it our way, which is not nationalizing the industry, but encouraging private, individual entrepreneurs.
Efficient industries. Because as soon as the state nationalizes it, the efficiency is bound to go down.
Our entrepreneurs can beat state nationalized industries abroad, but we can't beat them if we're hamstringed by regulation and we're forcing capital to go out of country. And unfortunately, that's just been the trajectory recently. You see it with New York, British Columbia, Manitoba. There's been a lot of jurisdictions, both on the state and provincial level, that are pretty unfriendly to mining. And so we need to basically draw the line in the sand, and the work TBC is doing is great. We need to do that across every state, every province. And I often say, mining is an international game. If a country doesn't want mining to happen, they can do so within their own borders. But you're not going to stop Bitcoin mining. Bitcoin mining is unstoppable. You're just going to force it to Venezuela, Russia, Iran. And do we want all of that economic activity to go to those countries? Like, the question clearly becomes, the answer becomes no, right? And so it's like, okay, how do we create a good system where entrepreneurs can thrive here, give back to the communities, and develop an industry in line with our society?
I couldn't have said better myself. I think what we see here is we're kind of on the precipice of this decision point. And again, you mentioned it's not binary, right? It's a spectrum of what the United States is going to do. We have a limited amount of time. Right now, it's small enough in Russia where it's not on the radar of the federal agencies, regulators, the national security establishment. But as soon as that becomes at scale in Russia, they're going to be thinking about that a lot. And we need to have our experts in place with the subject matter expertise, with the credibility, with the tact, with all of these different qualities ready to step into the void. And I think the work that Jason Lowery is doing is really important towards that goal. But you need a lot of intermediary steps between where they are now and thinking about it the way Jason Lowery is positing in his book, Software. So while I think that's a really important book, I think in order to have the national security establishment not reject that book on its face, we got to get them a little bit further down the line and then put that book in their hands, or put that book in their hands with some education that gets them from that, where they are now, which is 0 to intermediate, because that book's pretty advanced. I don't know if you've delved into it much. It's pretty advanced, and it posits some things that are quite futuristic, if you will, that maybe some of the older national security establishment would scoff at, whereas you and I in our 30s are like, hey, that's in our lifetime. We have a couple more decades to live, God willing, and we could see some of this stuff.
Yeah, and that's like going back a bit, like having a seat at this table of a new monetary system, which is Bitcoin, is the important part. Because if you throw it to the extreme and Russia starts gaining a lot of traction, and now 50% plus of the networks in China and Russia, China's like 15, 20%, Russia could climb to like 30% to push that to majority. As an American regulator, you could say, okay, well, we're going to ban this, but then 100% of it's going to go there, minus some of the other regions in the world. And then Bitcoin's not going to stop. It's an international monetary system that's free to use. They can't stop it. And so we need to have a seat at this table, or else we're giving up power of this future network.
We absolutely do, and I think the work that you guys are doing to bring more transparency to the markets, to data, to derivatives, firmware, the whole, mining pools as well, that's kind of your bread and butter, is very crucially important. That data really helps us tell the story of, and this is about narratives and storytelling right now until we can get them into the data. So we're really grateful for what you guys are doing. What is something that you're excited about that you want the audience to go to, read about, learn about that Luxor's doing right now?
Yeah, well, one thing that's taking a lot of my mental capacity right now is something we call Asic portfolio management. A lot of miners look at deploying Asics as kind of a passive investment. Buy an S19J Pro, useful lifetime 4 or 5 years on the hardware, depending on economics, just run it until it's done. We've been doing a lot of work into the data around Asic prices, their beta to the price of Bitcoin, and all these analytics. And we start to look at Asics kind of almost like a portfolio, right, where it may make sense to be heavily weighted towards higher efficient machines in some markets, mid-generation in other market conditions. And so miners are really, the best miners out there are the active managers, the ones that are looking at their fleet of miners and optimizing it for. And so at some points, you're going to be cycling in and out of hardware and managing your portfolio. And why I think that's important is because the halving's 12 months away. Only the best miners will survive unless we see a massive increase in the price of Bitcoin. And so it's critical that miners are thinking about their operations from an active perspective. Actively trying to pursue the best energy sources, drive down your power costs, manage your portfolio of ASICs the best way, using firmware to underclock or overclock your machines depending on market conditions, hash rate derivatives to hedge. All of these tools, either technology or financial services, I think are going to differentiate the good from the bad miners, and ultimately it's going to lead some companies to become billion-dollar unicorns and some companies to become bankrupt next cycle.
Some wisdom. Thanks for sharing it with us. Guys, Ethan, Vera, thanks for coming on, and enjoy the conference.
Thanks for having me.
Hey guys, thanks for watching. We had a great time here at Consensus. At the Texas Blockchain Council, we are striving to be the nexus between traditional industries, banking, finance, legal, energy, and the digital asset industry. So we want to help you get your brand in front of those kinds of companies with B2B opportunities. Reach out to us if that's of interest for membership or for sponsorship at the summit. Hope to see you there in November in Fort Worth. Thanks again. We look forward to seeing you at the summit.